All good. So welcome to the webinar. My name's Andrew Squalaria. Tonight I'm just going to go through what I think is a really important amount of information regarding tax structuring, and I'll just mute all. It's really important to understand the implications of getting involved with cryptocurrency and making sure that whatever decisions you make are fully informed for your medium and long-term investment strategies, making sure that you know the ramifications of your decisions, and also making sure that you let people know that can help you with minimizing your tax liabilities that you do have and have made transactions in cryptocurrency. So my name's Andrew Squalaria. I'm a digital asset strategist. I'm a Dacxi customer and a Dacxi coin holder. I've been involved with the company for 3 years, been involved with cryptocurrencies for close to 6 now. And I really enjoy sharing my confidence, knowledge, and ability to help people understand what's going on with cryptocurrency. So it's been an exciting journey for me to help people understand what's going on in the world of cryptocurrency. I'm not a financial advisor. I don't offer trading advice or any other sort of advice. This is of educational value, but make sure you do your own due diligence, consult your financial advisor and your accountant to make sure you've got correct tax structuring. If your advisor doesn't have any cryptocurrency, then don't ask them whether crypto is good or not, because they have no idea. They have no idea what you're looking at. There's 8,500 plus choices now, and I'll make sure that when they give you advice, it's actually from a position of expertise. And unfortunately, most advisors do not know what they're talking about in the way of what cryptocurrencies are the one to get. So we are at the beginning of the alt season right now. Now, only a few weeks ago, this coin market cap in Australian dollars just popped over the $1 trillion. We had $1 trillion parties just a few weeks ago, which was great. And now we're sitting just under $2 trillion market cap for Australia. It's about $1.4 trillion US, but it's a pretty phenomenal growth over the last sort of 5 to 6 weeks. And now we're at the beginning of that J curve, which we talk about a little bit. So we are really rocketing up, and don't hold your breath too much, because this is going to go to 3 trillion pretty soon, probably a lot faster than it did the last $1 trillion. So the other part of that there, of course, which most important part now is this number here, is the Bitcoin dominance. Now that's the total amount of Bitcoin represented in that coin market cap. So 60% of the market cap, the total market cap, is Bitcoin. And literally only 3 weeks ago, it was 70%. So people are liquidating their Bitcoins over into altcoins. So they're selling their Bitcoins, and the big investment companies like Grayscale, Fidelity, BlackRock, Tesla, and I think Amazon is coming out with a cryptocurrency as well. But all these big companies are now swallowing up all the Bitcoin that are being sold by us, because we're flicking into the alts now. And I don't think that's a bad idea, but Bitcoin is certainly still growing dramatically because that demand is huge. So we'll talk about the tax implications of flicking out of the alt season. Now, I did do a video only recently on my YouTube channel, New Wealth Strategies, called Alt Season. It does explain where we are right now, and you'll see in that video, I do talk about that 70% dominance. Now we're down to 60%. So this is happening right in front of us. And because the numbers are so big, we're looking at $2 trillion. There's a lot of money there that has flowed out of Bitcoin, but Bitcoin is still sitting at a $63,000 Bitcoin. So it's huge. So don't get angry, get smarter, get professional advice. Don't, tax is a part of life. There's a few things that we have to do in life, and one of them is do our tax. And the paying our tax, the amount we pay is optional, because we have to make sure we get professional advice to structure ourselves correctly so we can minimize what we pay the tax man. And that's when we go through a little bit about tonight, about the decision-making process that you would go to minimize your tax. Now, minimize tax obligations. So the ATA's got some very clear guidelines for cryptocurrency in Australia, which is fantastic. And there's nothing certain than death and taxes. Make sure you see your accountant. You'll have to know your nominal tax rates. If you've got a day job, a night job, or 3 jobs like I used to have before I got into crypto, you've got to make sure that the top end of your income that you're earning isn't too much. and you can minimize your tax liabilities in a legal way. So your nominal tax rates, what we're talking about, some people don't pay any tax because they earn under 20 grand. Some people pay 19, 35, 47% tax, whatever it is. Companies pay 27. So there's lots of different tax rates. Making sure that you are aware of what your nominal tax rate is. Probably across the board as a general statement, most people pay about 20%, but making sure that you know that rate so that you can make good tax decisions, and making sure that you talk to your accountant about that thing. Now, we can also have trust funds, which are good mechanisms to minimize your tax liabilities. Of course, the company tax rates, if you are buying and selling on a very regular basis, if you're not going to go for the capital gains discount, the company rates are also very attractive if you are buying and selling cryptocurrency within that 12-month period. And of course, my favorite is the self-managed super fund. There's a few little things in there you have to understand about cryptocurrencies, a lot more detailed with your auditing and making sure that you can leverage your super depending on your age. They can be super friendly, but if you're younger, then certainly is a very good way of minimizing your tax liability using a self-managed super fund. And you can definitely buy cryptocurrency with your self-managed super fund in Australia. And I know over in the UK, we are having that ability for people with pension funds to buy cryptocurrency through the Dacxi exchange over there as well, which is fantastic. And the capital gains tax is something that I'll talk a little bit more about today, and that's really important. So what is capital gains tax? That's tax on passive income. So if you buy an asset and it grows in value, you pay tax on the growth of that asset. But there's a really good thing is called capital gains tax discount. So if it's held in your own name, in your trust or your super, you do get a capital gains tax discount. So you only pay tax on half the gain at your nominal tax rate. So you don't get capital gains tax on corporate money and company money or corporations, but you do personal, trust, and self-managed super funds. So you have to hold it for a minimum of 12 months and 2 days, I think it is, but definitely 12 months. And that discount will apply to you. Same as real estate and shares. So we have the same rulings in Australia as shares and property. So your accountant will be aware of that. You just got to help them understand what you're doing with crypto. So there's a lot of different ways of claiming capital gains tax. So there's a thing called FIFO. There's also something called LIFO and WACO. No, WACC. So FIFO is first in, first out. That means the first coins you've bought, they're the ones that incur the capital gains when you sell them at the end. So if you bought a piece of $100 worth of Bitcoin 5 years ago, and now it's worth $5,000, you're going to pay $4,900 worth of capital gains tax on that particular purchase. Last in, first out. So if you bought the Bitcoin at $5,000 and you convert it to another asset, there's no capital gains on that because you only just bought it. So that's a good thing. But if it went up $100, you'd only pay the last purchased amount of capital gains, which would then be that $100. And weighted average is what most exchanges use, which means they just add up all your purchases and they add up all your expenditure to purchase those assets. They average it out, and that is your mean average price per purchase. And if you've made any profit above that, that's what the capital gains tax is calculated on. So a lot of exchanges use the central bit, but there is choices. You can do LIFO or FIFO or WACC, weighted average. So there is a few different mechanisms, about 8 or 9 of them, but they're the main ones that everyone uses. Now, what is your nominal tax rate? So that's what I talked about before, making sure you're aware of what your tax liabilities when you make a decision to sell your cryptocurrency and try and minimize the impact of that tax on that particular sale. So of course, first 18,000, you don't pay any tax. 18 to 37, it's 19 cents. 37 to 90, it's 32 cents. So most people are going to pay that. And 90 to 180, you got a lot of crypto, you're probably going to be punching up into this area. You get 37 cents. And of course, 180 and above, you're going to pay the full 45 cents tax rate. So making sure that when you sell any coins, you know whether you're going to have 100% capital gains tax on that particular purchase, or if you've kept it more than 12 months, you get that minimized amount with the discount that's applied. Now, what are your profits? I'm just going to go through a few slides here just to explain it in more depth. So you might want to re-watch this a little bit from the recording I do later. But you make a purchase, 3 purchases of $1,000 worth of crypto. So you bought a coin 12 months ago for $1,000. And then 6 months ago, you spent another $1,000. And of course, the coin price has gone up. So now you only get 0.75 of a coin. And the last area there, if you bought it a month ago and the prices have continued to go like they have, you're only going to get half a coin now. So in total, you've spent $3,000 and you've got 2.25 coins. So each coin now is worth $2,000, totaling $4,000 worth of coins. That doesn't seem right. That is not right. Anyway, so for your capital gains, the first purchase has doubled in price, which means you've got the same amount of profit and principal in that particular coin. The second one, you've only got 50% profit, and the third one, you've got no profit because it hasn't gone any higher than the 3 times. So you've got a total average price. You've got $4,500 worth of cryptocurrency now, divided that into 2.25. So your average price per Bitcoin is $2,000. So if you were to sell any coins and those coins are worth $2,000, of course, there's going to be some profit in that, which I'll explain right now. So you've got $4,500 worth of coins. And let's say you need to liquidate $1,000 worth of coins. So the balance will be $3,500 left of coins. So out of your sale, you'll have a certain amount of principal and you'll have that profit, which is all incurred in that one transaction. So you pay capital gains tax on every single sale you do. You don't just sell the $1,000 or $3,000 first, and then the profit stays there. So every sale, every time you sell something, you have a little bit of profit and a little bit of principal. Depends on how much it's gone up, depends on how much you pay. So that profit is really important in every single coin sale that you make. So you've sold 22% of your coins at $2,000 a coin. So your principal, you'd have 78% of your $1,000, $780 worth of principal. So you don't pay any tax on that. But you do pay tax on the profit. So there's 22% of your profit. So $220 is profit. So you'll pay your nominal tax rate on that there. All right. So you're only going to be paying tax on $220 out of a $1,000 sale. So your nominal tax rate is paid on the profit. If you held it for 12 months or longer, then the capital gains tax discount applies and you only pay tax on 50% of the realized profit. So this profit down here, instead of paying the full nominal tax rate at $220, you're going to be paying your nominal tax rate on $110. So I hope you understand that. So it could be 19% of that, which is $19, not a big deal. Happy days, take the profit, take the principal, and do what you wish with it. And that's what we're going to talk about next. When you buy other coins. Now, the most important thing that you need to think about when you convert one asset. So the only time you consider selling one asset for another asset is if you believe the second asset has a greater growth potential than the first. Otherwise, why would you sell it? Now, that's why people are opting out of Bitcoin, because they believe these smaller altcoins are going to grow in value faster than Bitcoin, Litecoin and Ethereum. That's everyone's choice. It's you decide what you do with your money, but you have to consider the tax, and you also have to consider, is the second coin you're buying going to grow faster than the coin you've actually purchased? So as an example, you have $1,000 worth of your original cryptocurrency, whatever that may be. And you might be looking at the charts, you might have a conversation with someone else, and you decide to convert that original coin over to a new coin. And you do that coin could possibly grow to whatever amount it is. And again, you've got your gain, you've got your principal, and you start the whole process again. But back here, at that arrow, that's where you pay your tax. You've incurred a tax debt there. You have to make sure that you put it into your tax return and making sure that your accountant is aware that you have taken profits and you do have tax on that. Now, just to add to that, I do know a few people that are not selling their Bitcoin, Litecoin, Ethereum, or Aave, or Link, or whatever. They're not selling it. They're actually converting it into other assets or liabilities. In this case, people are using it to buy goods and services. The only time they're not taxed if you're under a $10,000 purchase. So if you've got more than 10K worth of crypto and you go buy something with it, there is a tax liability a part of that transaction. So for example, if you go out and you've got 50 grand worth of, hang on, we'll go back here to, if I can quickly, we've got Tesla up here. If you liquidate nearly $49,000 worth of Bitcoin, or you walk into a Tesla dealership and you give Tesla $49,000 worth of Bitcoin, there is a tax debt on top of that because you would have made profit on that Bitcoin. So you have to make sure that when you actually purchase something with your cryptocurrency, that liability, in this case here, a Tesla, has got some income tax attached to it. You have to make sure that you've got that tax ready to pay the ATO when you do your tax. And I hope that you are aware that some people are spending some big money and you have to have income tax payable ready when the ATO knocks on your door saying, you need to pay us because you've gone and bought a Tesla for $49,000 and you only paid $1,000 for that Bitcoin a couple of years ago. So there is quite a large tax debt associated with that as well. Don't fear paying tax. Don't let tax stop you taking advantage of what's going on here, because your old coin may not grow possibly of the new coin. So you've got to make sure that the second coin is going to grow for you. So make sure you do a solid bit of research and take some good guidance from people around you and make your own decision ultimately, but don't swap it unless you think it's going to grow. So if you're going to make money, eventually you'll have to sell it. So you're going to have to pay tax eventually. So making sure that you're structured correctly to minimize that tax. Sell to gain, set up structures and minimize your tax liability. So that's what we're doing. We're selling a coin or converting a coin to another asset to do what you wish it to do. Timing waits for no one. We have got the biggest disruption ever happening right now. We see a flood of corporations and major companies and payment providers all jumping into cryptocurrency. Every day there's news of major corporations getting involved with crypto. So the dips we're having are very quick and the spikes are getting bigger and bigger and the prices are getting bigger because the major companies and corporations of the world are diving into the blue chips, and we're rolling money out of our blue chip coins into those alts and getting greater gains as a percentage than what we were holding the bigger ones. But if your entry point is crypto, the Bitcoin, Litecoin, Ethereum, learn more about it before you make any financial decisions. Make sure you're structured correctly. See your accountant, see your financial advisor, get good structural tax advice unless that person knows a lot about cryptocurrency. Thank you for being open to learning. Make sure you get back to the person that shared this video with you. Ask a lot of questions. Get involved with our community. Understand that there are people out there that are willing and able to help you on your journey in learning about cryptocurrency. For more information, go to Dacxi.com, go to the Dacxi Global and the Facebook pages and the Dacxi Global YouTube, and also my YouTube, which this one will be produced on, New Wealth Strategies. Subscribe and get notifications of YouTubes. Keep informed, get excited, and happy days for everyone. Take care. Bye-bye.